Jason Palliser here. Today, we're going to talk about what I've done the longest, which is lend money. Okay, so talking about grabbing capital, creating relationships for your good investment deals, right? But specifically, we're going to talk about private lenders and some hard money, stuff like that. So private lending, hard money. How should I structure those deals? What should I do? How should I approach it? What should I expect? It's what I've done the longest, folks. So let's dive into that. Don't forget, subscribe, click the bell so you're notified whenever we drop new good content for you. It's our goal to have the most educated investors on earth. And then share it and also put your comments and questions below so that we can help you. We're here to make an impact across the nation for all investors, but specifically we're talking about private money, hard money right now. How do I structure those deals? I'll just give you kind of what we do. Again, we teach this in our 2-day blueprint. We teach 2 specific sections on how to structure and how to raise capital for deals. Because quite frankly, it helps you get to the finish line a lot faster. Most investors don't do that and they just run around with their hair on fire when they get a deal and it feels tough and it feels hard. We're going to try and solve that a little bit here right now. But we go in greater detail than what we're going to do here just for the sake of time, right? But having said that, let's give you some a good foundation for some things that you need to be doing and thinking about to operate well. Okay, so the first thing is, I get this question all the time. Well, Jason, if I'm going for hard money, I'll talk hard money and then private money or private lender first. And sometimes people misuse those terms or whatever. To me, it's all just about lending money. I don't care what you label it, hard money, private lender, whatever. But from the hard money side, what can I expect to pay? It's different for different areas of the United States. East Coast, West Coast, things are higher priced. Hard money lenders would love to get 4, 5, 6 points up front, 6% of the money that they're going to lend you. That's what 1 point is 1% of the loan amount. So 2 points on 100 grand is $2,000, whatever. I would tell you East Coast and West Coast, hard money lenders are charging 1 point to 2 points, I would say on average. Okay, what interest rate? In highly competitive areas, again, higher price points, stuff like that, you're looking at as low as 9% all the way up to 10, 10.5. Regular hard money lenders, I would say by and large, you're going to be anywhere from 10% to 12% interest rate. It's an interest only. It's typically an interest only loan. They'll typically give you a loan for 6 months that then comes due. So be prepared to have these conversations. They're going to really want to know what are you doing with this asset? What's the goal for this project? So a tip for you to be organized when you have the conversation. Most of the time, if you're getting private lending, stuff like that, I would tell you there's probably going to be some sort of fix and flip situation or fix and refinance into better interest rates because you're going to keep it for a cash flowing asset. But having said that, 90% of the time, I would tell you that you're going to be fixing up a property. So when you're talking to a hard money lender, please come, because I've been a hard money lender for 16 years. Please come with an itemized bid. If you say it's going to be 30 grand in work, that doesn't tell me anything. The fastest way for you to look foolish, whether you've been doing this for 15 years or whether you've been doing it for 2 minutes, the fastest way to look foolish to a private lender, and especially a hard money lender, is saying, hey, I got a property. It's going to be worth 100 grand on the back end. I'm buying it for 50 and it needs 20 grand in work. Wonderful. 20 grand in what? Are you just spending 20 grand on a gold plated bathroom on a house that's only going to be worth 100 grand when you're done? I'm going to tell you, quickest loan approval, loan denial ever. No. Okay. So I need to know what you're going to be spending money on. So come looking professional, be organized, right? That's just a tip for you when you're going for hard money and or private money, because they're going to want to know what you're doing with the money as well. Right. So typical terms on the hard money side, East Coast, West Coast, 1, 2%, 9 to 10, 10.5 interest rate, 6-month loan that comes due. The good hard money lenders will do an automatic renewal. They'll charge you another percentage interest rate, maybe another point or 2 to do an automatic renewal for another 2 or 3 months. But those are questions that you need to ask. Hey, what happens? Hard money lenders and private lenders, just, they don't want to take the asset back from you just in case the project takes longer. They just want to know that you're organized and have your what together, right? So more than likely they're willing to extend for you. I'm just trying to teach you a few things. Having said that, on the private money side or private lender side, so individuals that have money that might want to put some money on a hard asset secured by real estate. The reason there's sex appeal in it, and again, if they don't know it, if you're talking to somebody about being a private lender for you, you need to give them some of the benefits. The benefits is that it's secured by a hard asset. Wherever they have their money right now, it's probably not secured by a hard asset. So that's an advantage, right? Another advantage is that they're securing that money against an asset that has a good equity position, because I'm pretty sure you're not going to go, hey, give me 100% of the money of the 100% of the value of the house, because they'll probably say, let me show you a magic trick. No. Okay. I knew I would get Mike off camera with that. And I'm just telling you things that you probably don't want to do, right? So it's going to have equity in it. Okay. So that's a good reason for somebody to lend money for you. And then my most fun one is this: wherever these people have their money, when you're talking to them, just be like, hey, another thing that I just want to make you aware of is that just realize, since this is real estate, I'm going to have insurance on the property, and you're going to be on my insurance policy as the lender, which means this: your money's insured. I don't know where you have your money now. I don't know if it's a stock market in the bank account not earning you anything, but guess what? When you lend on a good asset for us, you're protected by insurance. Do you have your investments anywhere else that are protected by insurance? Probably not. Anything happens with the house, burns down, this, that, here's all your money. Here's all your money back. Here's your return on investment. Because you can insure it. You listening to me? You can insure it for more than what they lent to you, right? So let's say they lent 100 grand, 200 grand on your project. You can insure it for 220. And over the life of the loan that you promised them over the interest rate, which we'll talk about in a second, let's say that they lent you 200, they're going to be owed back 210. Well, you can insure it for 220. Anything happens, there's all their money. So that's a level of comfort, right? So their money's well protected. So now on the private lender side, everybody always asks, well, what interest rate? I'm going to try and find a private lender because they're cheaper than hard money lenders. Okay. Not always, but okay. What I would try and do is this: anything that you can get a private lender that's below 10%, you're doing well, right? And but there's a technique on how to do this. Again, remember what I said, this is what I've done the longest. Professional investor for 22 years, grabbing off-market properties, 20, 30 homes a month, 40 homes a month for hedge funds for a long time. So again, when we do a 2-day blueprint, so look into it if you haven't, the number 2dayblueprint.com, see what we do for people. We have a list of things that we do to help you be a professional investor and take over your marketplace. You'll see what other investors say about us. But going back to this, lending money is what I've done the longest. Okay. So a little bit behind the curtain on what we do on a 2-day blueprint. And if you like this, then as a responsible business owner, schedule a call to talk to us, right? Put in the comments, hey, I need some help. Can I talk to you ASAP? But you can schedule a phone call with us at 2dayblueprint.com and get information on what we do. So here's pulling back the curtain a little bit inside the 2-day blueprint. Okay. So when we get to the section about raising capital, private lenders, we have what you do, how you show them it's protected, how you put your best foot forward. But here's one thing that I want you to know and understand. There's a way to talk to them and negotiate better interest rates. Here's how we do it. Okay. Here's the tip. Okay. You could just say, yeah, hey, if I find a good asset, I'll put it in front of you if you want to lend on it. And you guys just talk back and forth. I'm like, hey, what interest rate do you think? And they say, well, 9 or 10, or you say 10. They're like, well, I maybe want 11. Frame it. Ninja style. Frame it the right way. Okay. Here's what I mean. Have the conversation and say, hey, look, I would love for you to be an ongoing private lender on the good deals I put in front of you, right? On the good deals I put in front of you. And so on any deal that you fund for me, we will do anywhere from 6 to 10% return on investment. And so if and again, protected by insurance, protected by good equity, protected on a hard asset. And those are sexy things to somebody that could be a private investor for you, right? Private lender for you. But you're wanting to get a better interest rate. You want to get the best you can. So if you just start talking in terms of, hey, I'll give you 10%, then your basis is 10%. But let's be better than that. Let's be pros, right? So here's something. Try and find this anywhere else on the freaking internet. Okay? You can't. Here's the way I want you to do it. You heard me and I said it, but now I'm gonna peel back that onion. I said 6 to 10%, didn't I? I did. Here's why. It's natural. It's natural on the other end. The private lender end of that conversation. Well, 6, 10. What? Yeah, I'd like closer to 10. The reason I say 6 to 10, because I know it's fun playing chess against somebody where I know their next move in chess. when I say 6 to 10, naturally they're going to go, well, yeah, I consider being a private lender for you, but I probably want closer to the 10. I wanted them to say that. If I just said one interest rate, then we negotiate back and forth. I've already learned my lesson. I've already earned my stripes. Okay. I've already made that mistake. So don't make that mistake. Here's why. Here's what I mean. And then you'll realize when we do a blueprint for somebody, why if they're in your city, they're winning the game over everybody else in town right now. And in this raising capital sandbox, here's why we do that. When I say 6 to 10, I want them to say, well, I'd want closer to 10. Perfect. You just fell into my trap. Thank you very much for that. Here's what I mean. And heaven forbid one of my private lenders sees this video online, which they probably will, but I'm still going to do it to them anyways. See you in the future. The reason I say 6 to 10 is because I want them to say 10. Here's what I say when they say, well, I want closer to 10. I'm like, okay, well, I understand that. And I'm certain that we're going to put assets in front of you that, yeah, we'll give you 10. But the reason I say 6 to 10, here's where you're going for the kill. The reason I say 6 to 10 is this. If it's a project that we're going to have the money out for a shorter amount of time, 3-4 months or whatever, then it's probably going to be closer to the 6%. If it's a normal project, because you're establishing things with them from a time frame standpoint. If it's a normal project where I'm into it for 5, 6, 7, 8 months, then it's going to start to be closer to the 9, 10 range. Does that make sense to you? Because I want to do multiple of them with you. I would love to keep turning your money over, protected by a hard asset with insurance against it. And so it just depends on how long we have the project out. So we'll just look at each one on a first come, first served basis. You tell me if it works for you because the capital's ready to go. And then we'll just look at it on a case by case and just go from there. You know what they say 99% of the time, my friends? My future 2-day blueprint assassins in training. They say, okay, yeah, sounds good. We'll just look at it on a case by case basis. But I threw it out there and I established that there could be a 6 or it could be a 10. And I wanted them to say 10 because they just fell into my trap. You get that? Are you seeing how there's ways to negotiate here to get better interest rates? I'm just teaching you how to be a better pro and live in the investment sandbox like a pro and run circles around your competition. So again, if you like this, subscribe, hit the bell for when we drop more good content. The more you refer more people to us to join our channel, and the more we get your good feedback and comments and what you're wanting next is the more that we curtail what we do to teach everyone across the nation to be a better investor and deliver more to you. So we can't wait to add you to our team. Like I said, you want to check out what we do, just go to 2dayblueprint.com, the number 2dayblueprint.com, see what people say, see what we do, schedule a call so we can talk specifically about you and your marketplace. So this is Jason Palliser signing off. Until next time, go get them and start raising capital.